How did the Ecuadorian government, during the liquidation of CREA, use despicable tactics to swallow up the savings of large depositors? 1. Why did CREA collapse? The answer is simple: insolvency. Every cooperative, from operating normally to bankruptcy, falls because of regulatory laziness, corruption, and negligence. If regulators had acted responsibly, problems would have been stopped early, not allowed to grow into collapse. Remember, the common feature of all bank failures is insolvency. This is the key to understanding the fraud that follows. 2. Who is responsible for compensation? The answer is clear: the government's deposit insurance agency, COSED. It's like this: A borrows money from you, A cannot repay, then the insurance pays you. It is not. A defaults, insurance refuses, and B, C, D, E, F are forced to cover the loss. That logic does not stand. 3. Myths during the liquidation process. Myth 1. The insurance fund gives the money to other cooperatives and they pay depositors. This assumption is false. Any refusal to pay depositors directly while complicating the process only serves one purpose: to cover up the plan to seize large depositors' funds. Myth 2. New cooperatives will rely on good loans from CREA to repay depositors over time. Back to the first point: CREA collapsed because it was insolvent. If most loans were bad or uncollectible, how can anyone still believe in this story of repayment through good loans? 4. If the government truly wanted fairness, the correct approach would be: all depositors, regardless of amount, should first receive the $32,000 insurance payout. The remainder can then be transferred into cooperatives for continued liquidation. At least then everyone would have a basic guarantee, and the rest could be accepted. But the reality is, deposits of $32,000 or less are paid directly because the government seeks stability. Deposits greater than $32,000 are forcibly transferred to new cooperatives with reduced insurance and greater risk. Deposits greater than $32,000 but not transferred receive neither the $32,000 payout nor any clear solution. 5. The hidden trap. Large depositors' accounts are being placed into cooperatives with coverage as low as $0 to $11,290. Ecuador reviews cooperative ratings every 3 months, meaning the government can downgrade at will, declare bankruptcy again, and wipe deposits to zero. Splitting depositors across 18 cooperatives is a tactic to divide and weaken them, making it harder to unite, easier to defeat one by one. 6. The foreign depositors' dilemma. Foreign depositors make up a large portion of CREA's big accounts, but liquidation now demands they provide power of attorney, notarization, international certification, and new account opening. For foreigners with no relatives in Ecuador, this is almost impossible. For those under political asylum abroad, it is absolutely impossible. The irony is, when these deposits were made, such hurdles did not exist. Now, after bankruptcy, these artificial barriers are being used to shift blame. It was your own notarized choice of a new cooperative. So-called forced transfer is not protection of financial stability, but institutionalized plunder under a legal disguise. The $32,000 insurance guarantee is swallowed. Depositors are forced to face the risk of a second collapse. Foreign depositors are trapped, their funds permanently frozen. This is a fraud even greater and more disgraceful than the 2013 Coopera case. Tragically, some still cling to the fantasy that the government will compensate beyond insurance. This is pure delusion. The reality is, the government's goal is to extinguish debt by confiscating depositors' funds. In episode 4, I will release a letter to the people of the world, exposing this blatant fraud even further.